Welcome everyone to the first Saldanha Bay Industrial Development Zone tax webinar. We're very pleased to have so many participants today. If I look on the attendees list, it's sitting at 75 and counting upwards, which is really great for such a specialist subject area. The purpose of our engagement for today is to really bring together what we have is the SEZ tax incentives, but also a lot of it is coming from our SARS counterparts. So we've managed to get together a wonderful panel of SARS tax specialists, as well as us as the SBIDZ, explaining how we are here to support and facilitate the incentives that are offered with regards to SEZs in making us a more attractive destination for investment. The order for today will run in such a way that we'll have our program director, our CEO, Ms. Fiscal, who will introduce the SARS panelists. They come from various areas, which she will introduce, and then we will speak about what the Ease of Doing Business unit at the Saldanha Bay IDZ does and is responsible for. And that is the unit that I head as Benedicta Durkin, the executive for the Ease of Doing Business. And my presentation will be in conjunction with my colleague, Ms. Shannon Newman. And then at the end, we are going to open up the Q&A session. However, I do encourage you as we go along to be posting your questions on the Q&A. So if you look at the bottom of your screen, there is a Q&A chat box that's been open already, where as we move through the different technical content of the presentations and the speakers, that you can post your questions, and then at the end, we would address those, as well as the opportunity for you to unmute yourself and speak. And the purpose of the webinar, also as you're posing your questions, is that we have in the audience tax and legal consultants and professionals who often are interfacing or assisting investors who wish to participate on the Special Economic Zones program of South Africa. And these could be foreign companies as well as local. So the idea is that there is alignment in how the information is disseminated with those potential investors. And we've brought in the very people from SARS who in most instances are the original people who've written up those policies, who work with those policies daily and those tax incentives, to give the direct explanation of the intent behind them and also how to comply, as well as showing the support that is provided in the Ease of Doing Business unit within the Saldanha Bay IDZ. So from that, then we all are aligned in terms of how we together are able to offer this service to potential investors and indeed grow the economy of South Africa, and also to really show that we are open for business in the Saldanha Bay IDZ and welcome all of the various parts of the world and the country for investors who wish to operate in our zone. With that, to not hold us up any longer, I'm going to hand over to our program director, Ms. Fiscal, and she will take us through the introduction. Thank you.
Thank you, Benny. Welcome, everyone. It's wonderful to have you here. So on behalf of the Saldanha Bay Industrial Development Zone licensing company, quite a mouthful, I wish to welcome you all to this webinar as we showcase the very appealing tax and financial incentives of the SBIDZ. As you might know, the zone is the first South African free port because it includes an SEZ within a port where some of the footprint has been designated as a customs control area. The IDZ has been supported in this by the Treasury's GTAC unit, so Government Technical Advisory Center, as well as SARS, which resulted in our designation of that customs control area in 2019. We have also worked closely with the National Department of Trade, Industry and Competition on the parameters of the SEZ and really enhancing our value proposition to investors. In particular, I would like to welcome our keynote speakers from SARS today, who will be addressing the webinar on the topic. First, we will have Mr. Andrew West, Corporate Income Tax. Andrew is a senior manager within the Leveraged Legal Products Division at SARS. He has been involved in the development of the SEZ legislation from its inception and with the SARS rollout of the corporate income tax incentives for companies located within SEZs. Next, we will have Mr. Ashwin Prasad, is a VAT specialist within the Leveraged Legal Products Division at SARS. He performs research and analysis relating to VAT and assists in the implementation, development, and maintenance of the VAT legislation in a manner that provides synergy between the VAT policy intent and the tax administration. Next will be Mr. Irvin Solomon. He's a customs legal specialist in the Legislative Policy, Tax, Customs, and Excise Division. He will take us through the customs legislation pertinent for our talk today. Thereafter, we will have Ms. Sitembile Magwasa. She's currently a senior manager within the Accreditation and Licensing Division. Her current portfolio includes customs accreditation, where she's responsible for coastal AEO program that covers the Western Cape, Eastern Cape, and KwaZulu-Natal geographic areas. Lastly, we will have Mr. Henson Msongilwa from SMME and Traders. He has 19 years of customs excise experience within SARS and is currently an executive based in Cape Town, and he will present just the trader and travelers within the SMME segment. Persons from SARS who are not part of the formal panel but available for questions from the audience when we get to the Q&A include Zuleika Molgi from Customs Products and Policy and Nora Moteta from SARS Licensing and Registration Division in Alberton. In particular, I would like to thank Mr. Hilton Dice from the Western Cape SARS office for facilitating this august panel. It's really wonderful to have the different specialists on hand and be part of this panel. And I think that's probably why we're nearly reaching 100 attendees today. Over the years, the Ease of Doing Business unit has also worked closely with Mr. Raymond Singh from the SARS Center of Excellence and Mr. Henson Msongilwa when he was the regional executive for branch field operations in the covering the Eastern Cape, Free State, and Northern Cape. And it's his team that is creating the enabling fiscal and financial environment that we put forward today. The webinar today will outline the fiscal, so the reduced corporate tax rate, employment tax incentives, and financial matching grants, reduced interest rate loans, customs, so the control area, enterprise incentives pertinent for businesses coming to the zone, and explain the role of the Ease of Doing Business unit and what assistance it provides. Lastly, from me, I would want to say that our investors, and not only I think our investors, but the South African economy needs to have an easier way of doing business with us, not only as an SEZ, but I think in our economy. And that one-stop shop model that is espoused in the SEZ program is meant to cut through the red tape. And our Ease of Doing Business unit, which is headed by Benedicta, serves this role. So thank you once again for joining us. And I would like to hand over to our keynote speakers, starting with Mr. Andrew West. Thank you.
Good morning, everybody. So normally this discussion that I'm giving you is well over an hour and I've got 5 minutes. So I'm going to go ahead without any further delay. So just to give you some idea in terms of the historical side of things, for quite a long time, we've had tax incentives which were available in the former IDZs. But one of the concerns was that there was nothing available for corporate income tax or the income tax side. And government felt that in order to have a package that was complete, it would be best to make provision for this. And so they changed the act a few years back and introduced the concept of SEZs. And amongst that, the major incentive which was introduced for income tax purposes was contained in Section 12R. And what Section 12R does is it grants a 15% tax rate to taxpayers on their taxable income, provided their companies located within an SEZ. Now, just to give you an idea, this is obviously it's a very major tax incentive because normally the tax rate is 28%. I'll give you an example quite shortly, just so that you get an idea of how impactful it can be. The other maybe less meaningful allowance that was given was Section 12S, which allows certain qualifying companies to get a accelerated allowance deduction on the buildings that they put up or improvements that they make to the buildings. This is at 10% per year. So over 10 years, you can write off the buildings. It has limited application, which I can't go into right at the moment. Then, so both 12R and 12S are subject, sorry, I'm babbling on, but I'm not sharing my screen, am I? Which I want to do. Can you see my screen? Wait. Can you see it? Okay, good, thank you. Sorry, my apologies. So both 12R and 12S are subject to sunset clauses, with the incentives ceasing to apply in respective years of commencement, 1st of January 2031. But so what this essentially means is, when we talk of a sunset clause, is that the legislation will only, or the incentive will only be around, in this case, until 2031. So what government typically does is they provide these incentives, but they say that they'll be of limited application. Typically, when the time comes, either government decides to renew it, they'll look into it or change it, or they might decide that they don't want it to continue anymore. But really, they do an assessment towards the end to see how effective the incentive has been. So just to give you an example of the benefits, let's say you've got a taxable income of 28%, as all companies do, and you have R1 million of taxable income. Taxable income, in very simple terms, is just the profits of the company. If you tax at the normal tax rate, you would be paying 280,000 Rand to SARS. But at this rate, the special tax rate, you get 150,000 Rand, so which you have to pay to SARS. So it's almost half. And I always say, I just don't know why the Treasury just didn't make it half. So I could tell you that it's 50%. It would have been a lot easier. All right, there are various restrictions on these tax incentives. Not everybody can get them. Not all companies within SEZs can even get them. And one of the things is that the Minister of Finance needs to approve the SCZ for purposes of Section 12R. And luckily for Saldanha, in this case, on the 6th of July 2018, the following SCZs were approved: Ccae, Dubai, East London, Maluti Upper Fung, and Richards Bay, and then, of course, Saldanha Bay. So if you're a company located here, you can get them. But that still doesn't mean that everybody can get it. There's quite a lot of anti-avoidance legislation, which prohibits certain companies from getting the benefit, mainly introduced because to counter things like transfer pricing. And also there are issues where often, whenever we introduce tax incentives, companies come in and they try, even if they're not, even if the incentive isn't for them, they try and make it applicable to them, and then they fiddle with the legislation and interpret it in funny ways to include them, even though it wasn't the intention. So even if you are a qualifying company, you can be excluded, and there's certain kinds of companies that aren't allowed to get it. We don't want to encourage, for example, arms manufacturers, alcohol or tobacco manufacturers. Those are excluded specifically in the legislation. But we've also got certain exclusions which are located in our in the government gazette. I'm not going to go into them because they're quite a lot, but the essence of what they try and exclude there is, it was always the intention that these incentives would apply to incentivize manufacturing. And so if it's a service type industry, let's say you've got a restaurant on the premises, they do not get that tax benefit. And here you can see a whole list of these in terms of the government gazette. You can see real estate activities, et cetera, et cetera. But my point is that the common thing that they have is most of these are all services as opposed to manufacturing. And so that is me. I hope I didn't go over too long. A fairly complex topic if done, you know, in full detail. But I think later on, if you've got any questions, you will be able to ask me in our panel. So I thank you very much.
Thank you, Andrew. Now over to Ashman.
Yes, good morning. Good morning, all. Thanks to the SBIDZ team for allowing us this opportunity to share the incentives with you. I will start basically with a very high level overview of the incentives. I just want to get into it immediately, and we will have further discussions in the Q&A regarding any aspect which you have, which you require any clarity on. So basically, this slide I put this up because it shows the relationship between the different government departments and the roles that they play when it comes specifically to the special economic zones. So you'll see that the Department of Trade and Industry, they are the ones that determine trade policy, and they are responsible, or they are mandated, or the custodians of the Special Economic Zones Act. Then you're in extreme right, you have a National Treasury, which basically determines tax policy, and they are the custodians of the Value Added Tax Act. And in the middle, obviously, is SARS, and what we basically do, we administer the trade policy that's determined by the Department of Trade and Industry, and that administration is done through the Customs and Excise Act, their rules and their tariffs. And we also administer the tax policy, and in that sense, we administer the Value Added Tax Act. So in short, SARS administers these acts. The policy determinations lies with the Department of Trade and Industry and National Treasury, respectively. So that basically is the first slide, just to put you in the picture as to where SARS comes in regarding these incentives. You will notice that this very high level overview of the incentive, it's basically in respect of two legislative instruments that I'm going to discuss with you today very quickly. And those two legislative instruments are firstly the VAT and the customs. So as my colleague Andrew mentioned earlier, the IDZ program was in existence for quite some time, since 2003, but with no corporate income tax incentives. However, when that was implemented, it was the VAT incentive and the customs incentive were implemented together with the IDZ program. So the customs and VAT incentives existed since 2003. So the DTI reviewed this program, and they introduced the SEZ program in 2016. And then we made some minor changes. When I say me, I mean the VAT and the customs made some minor changes to align to the new SEZ framework regarding the incentive. And I just want to highlight up front that the VAT and the customs incentives operate very differently from the corporate income tax incentive that my colleague Andrew just highlighted to you now. So before I go on explaining this slide, I just want to say that the basic VAT principle is that any supply that you make in the Republic is taxed at 15%. Any imports into the Republic is taxed at 15%, and exports are zero rated. So that's the basic building block for the VAT. And when it comes to the customs, their objective basically is to provide border control management. They administer the trade policy and industry schemes, and they collect revenue, obviously, mainly in the form of import duty. So what this high-level slide does is that it explains how you access the incentive, what requirements you need to have in place, how you need to qualify, how you need to license yourself, how you need to designate yourself. Now, before I proceed there, another very important point is when it comes to the VAT and the customs incentive, it's very important to note that in the South African framework, the SEZ is regarded as an area within the borders of South Africa. It's not like any other country where they have these special zones, and those zones are not regarded as being within the borders of their country. So very important to know the SEZ is always regarded as being within the borders of South Africa. And then there's just 3 basic principles that you need to also note when it comes to the VAT and customs incentive. We have 2 types of warehouses that operate in the SEZ, specifically in the CCA. You have a licensed storage warehouse, and when it comes to a licensed storage warehouse, any goods entered into such a warehouse is not entered for home consumption. Now, that concept is very important because once it's entered for home consumption, then only does the VAT liability trigger, and then only does the duty liability trigger. So when it comes to a storage warehouse, it's regarded as not being entered for home consumption. Therefore, no VAT and no duty is triggered at that point in time. The second type of warehouse you have in here is called a manufacturing warehouse. And in a manufacturing warehouse, when goods are moved into that particular facility, it's regarded as being entered for home consumption, and your VAT and your customs duty are triggered. However, there might be some exceptions to that, where exemptions from VAT apply and rebate of duty apply. The other important thing to note is you will not be able to move goods from a manufacturing warehouse to a storage warehouse. And the reason for that is very simple, that I said to you, a storage warehouse are goods not entered for home consumption, and a manufacturing warehouse are goods entered for home consumption. So you cannot move goods from a manufacturing to a storage warehouse, because you cannot change the status of the goods from being not entered from being entered to being not entered for home consumption. So that's the basic principle. So what this slide basically says is that the DTI needs to designate the areas in SEZ, and the DTI needs to issue a permit to the SEZ operator. And this basically gives you a background of the role players and how to access the incentive. So the 2 major role players is your SEZ operator. Your SEZ operator applies to SARS, our Customs and Excise Division, for a CCAE designation. You would have heard our program director earlier on mention that they're already designated as a CCA. The operator will also have to register as an importer if they want to access certain incentives. And most importantly, they have to register as a rebate user under rebate item 49802. The next important role player is the business, which is the investor that wants to locate into the special economic zone. Their roles and obligations, they need to apply to SARS, once again to our Customs and Excise Division, for registration as a customs control area enterprise, right? And also they need to register as an importer and an exporter, because they're going to be most probably be importing raw materials and exporting finished products. As my colleague Andrew mentioned earlier, it's mainly for manufacturing. And the third requirement is they also need to register as a rebate user under rebate item 49801. So the last thing that the business needs to do is to license itself as a manufacturing or a storage warehouse. Most of these, when we do these presentations, these are assisted by the SEZ operator in any case. So those are the obligations that you need to meet to access the incentive. Now let's look at the most important slide. What is the incentive? I think that's why we have everyone in the virtual meeting today. And here we depict the SEZ incentive that is provided for under the 2 legal instruments, being the VAT and the customs. First, most important point is that the customs control area enterprise. Now you'll notice that in my previous slide, I mentioned that would be the business that's now registered to be a customs control area enterprise. And the SEZ operator must be located within a specific area in the SEZ, and that area is a customs control area of the SEZ. And what happens in that particular area for the operator to have the incentive or to get the benefit of the incentive? The operator is allowed under rebate item 49802. So you can see how important registration under that rebate item is critical. They can import any goods with the rebate of duty and a full VAT exemption, right? The operator is also allowed in certain instances, and my colleagues who will speak later on might clarify this point, they also allowed a 70% reduction on surety bonds, because whenever you import goods, you're required to put up surety as an importer to our customs and excise. So you have that benefit of a 70% reduction in the surety bonds. And from a VAT perspective, the operator can source locally local goods and services at the 0 rate. but these goods must be delivered in a CCAE or rendered in a CCAE. Like with any other incentive, there are always exceptions. So there are certain exceptions to these, which I won't go into now. We can have them in the Q&A if you're more interested in those exceptions. Then the second role player is now the CCAE, and how do they access the incentive? Once again, registration under rebate item 4981 is very important. They are also allowed to import goods of any description with full rebate of duty and a full VAT exemption on those goods. The investor or the business is also allowed to source local goods at the 0 rate, provided they're delivered into the CCAE and the services are physically rendered there. Once again, note there are certain exceptions that are applicable to the CCAE as well. The fourth slide, that slide is basically saying to us the obligations that the operator and the CCAE must fulfill in order to qualify for the incentive and in order to be compliant with the full requirements of accessing the incentive. And what we're saying here is that the operator is mandated to control the customs control area. That normally is a function of our customs and excise division, but that now has been mandated to the operator. The operator, whenever they import goods and want to access the benefit, they must clear those imports under rebate item 49802. There is a specific customs procedure code that they need to complete on the import declaration. And once that procedure code or that rebate item shows 49802, it indicates immediately to SARS that these goods are moving to a customs control area, and we're not gonna charge them any duty and no VAT on those goods. Most important thing is retention of documentation to prove that you qualify or you are compliant with the incentive. You need to obtain and retain the SAD 500, which is for imports, and for locally sourced goods, a VAT 267 and a tax invoice. Same with the customs control area enterprise. They must clear goods under rebate item 49801. If they don't use that rebate item, they will not be allowed to get the VAT exemption or the rebate of duty. Again, retention of documents are very important. They need to retain the SAD 500 for imports, VAT 267 and tax invoice for domestic supplies. I have put up some additional reading notes there for you. From the VAT side, we have an interpretation note 40. It's very comprehensive. It sets out, I think, about 27 or 28 transactions that can happen in a SEZ or a CCAE and a CCA, and it gives you the VAT implications of all those transactions. So very interesting reading. It's quite a long document, but I implore you to read that. And from our customs side, please access our customs page on the SARS website, the SEZ page, and it gives you a lot of information on there for additional reading on the customs side. Our last slide, I just want to very quickly depict to you now, pictorially what I've just mentioned, because sometimes a picture better stays in your mind than words written on a document. So here we have the South African, we have South Africa, and we have the SEZ in the red, the CCA in the blue, and the CCAE being the white area. Now, I just did this for a depiction of how the transactions operate, and it not necessarily will take this model, because in some SEZs, the whole entire SEZ is a CCA. But nonetheless, be that as it may, the first transaction that can happen is a domestic supply, which I explained to you, to a CCAE. And because I mentioned to you earlier on that domestic supplies are taxed at 15%, and the SEZ is an area within the borders of South Africa that will carry VAT at 15%. But what now has happened is, with the introduction of the SEZ framework or the IDZ framework, we have now incentivized that transaction, and that transaction will now carry VAT at 0%. Now you'll notice I've put in export there. We can discuss that under the Q&A. The next type of transaction that can happen is a domestic supply from the CCAE into South Africa. If the CCAE supplies goods into South Africa, remember the idea was to incentivize manufacturing for exports initially, but now you're allowed to supply into South Africa. But if you supply into South Africa, it's going to carry VAT at 15%, and you have to bring duty to account on any goods that were imported under rebate of duty. So you will notice that this transaction is not incentivized. And the reason for that is simple, because this whole program was to incentivize manufacturing for exports initially. But the most important factor why it's not incentivized is because You don't want to compete with a business that's situated in a CCAE and a business that's situated outside a CCAE. Because if a business is situated in a CCAE, and if we incentivize that transaction, that will carry VAT at 0 rate, whereas a business situated outside the CCAE and supplies exactly the same thing will carry VAT at 15%. So that means that we potentially could put the business that's situated outside the CCAE, we could put him out of business because it's cheaper to acquire from a CCAE. So therefore that transaction is not incentivized. So it basically brings about parity. The next transaction is the import transaction into the CCAE. It'll our normal VAT rules, it'll charge VAT at 15% and also duty if it carries duty. But that transaction has now been incentivized and it's exempt from VAT and a full rebate of duty applies there. Now, when it comes to exports, we have two types of exports. A direct export, because it's going out of South Africa, it's 0% and there's no duty. You'll see I put a condition there. The condition we can talk about in the Q&A if you want to know about that. But essentially on a direct export, there's no VAT and there's no duty. There's no need to incentivize that transaction because that transaction is already VAT-free and duty-free. The second type of export, the next transaction we have is a supply within a CCAE. Now, remember I said to you earlier that a CCAE is an area in South Africa. So a supply within a CCAE, because it's in South Africa, it carries VAT at 15%. But this transaction has now been incentivized and it will carry VAT at 0%. Then we have an indirect export, right, where goods are supplied to a foreigner in South Africa and the foreigner exports them. We charge VAT at 15%. Or 0% depending on the type of export. We can discuss that in the Q&A. And then once that person exports those goods, we refund the 15% VAT that was charged to him. And if there was any duty, there's a refund of the duty. So basically that is a pictorial depiction of what I've said to you. And that brings me to the end of a very high level presentation. And I thank you for that.
Okay, then Sitimbile Magwasa from Licensing and Registration.
Good morning, colleagues. Nora will take you through the first part of the presentation. Just to get all the colleagues on board, we'll be presenting a licensing aspect and accreditation and the SMME aspect all under one presentation with Nora taking you through the first part, and then I'll take you through the accreditation, as well as Mr. Henson Msungeni will take you through the SMME segment part of the presentation. So I'm just going to quickly hand over to Nora to do the first part.
Good day, thank you so much. I'm going to quickly take you through the registration and licensing processes and strategy. As licensing and registration, the strategy is to ensure that we improve our trader compliance. This is to create that platform that enables simplified registration and licensing processes that will encourage our taxpayers to do voluntary compliance. How are we going to do that? We will be doing to ensure that we register a licensed eligible customs and excise traders who will actively contribute to growing the economy with integrity and commitment towards their tax obligation. As licensing and registration, we are aiming to improve trader and employee experience by maintaining clean registered registers and meeting performance targets. This is by institutionalizing a culture of improved work principles, norms, and habits that manifest itself into a service quality imposed by the team and the traders. By ensuring that we have the right people in the right jobs, doing the right jobs at the right time with the right set of skills and abilities, saving our clients and ensuring that we introduce improved ways of doing business that is simple, fair, equitable, transparent, and easy to use. How are we doing that? Currently, we are expanding our digital platforms, also implemented licensing framework and SMME program. We are monitoring compliance and ensuring that there's taxpayer education. Next slide, please. What's new? This is exciting, this exciting part about licensing and registration. In April 2021, Customs and Licensing team implemented all customs line types on RLA system. Just to take you back, in 2020, SARS implemented an e-filing customs licensing system, whereby only 45 client types were implemented. As we moved on, we had other rollouts and we migrated other client types. Currently, we are having all these line types on RLA system. So our clients can be able to submit their application via a branch or alternatively through e-filing platform. You are able now to apply for approved exporters on the e-filing warehouses. This includes all the customs warehouses and manufacturers. SEZ special economic operators can also now apply on RLA, reporters as well, and producers. So the simplified process and digital process is that clients can be able to apply for all customs line types on RLA. This is an electronic system that you can be able to find on your e-filing under customs. Next slide, please. Next slide is a simplified process to say once you've submitted your application or if you are struggling to access the e-filing, you can be able to contact the SARS Contact Center, who will be able to support you in terms of submitting your application on e-filing. Once your application is submitted, you can be able to manage it on your dashboard. It gives you the access to manage all your workflows on your e-filing. In instances whereby you're having challenges to submit via e-filing, we are still having alternative routes of submitting via a customs branch. And these are the email addresses of the branches nationally, where you can do a submission manually. However, they will still be capturing your application via RLA system. Once your application is submitted and you have your case number, either way, any channel, either RLA or SSM, you'll be able to escalate if your case is out of the turnaround time. If you submitted via RLA and you are having an RLA case number, this is a case number that starts with the 100 number. You can be able to escalate to RLA registrations at sars.gov.za. And if you are having an SSM case, this is a manual submission D185, whereby you'll get a case number starting with 3 number. You'll be able to escalate to customs SSM reg at sars.gov.za. Thank you so much.
Thank you, Nora. Colleagues, I'll be taking you through the accreditation aspects of the business, which is still under licensing. And then the other arm of licensing is then accreditation. So what's on your screen now would be just the accreditation model that we follow within the division, which basically talks to a bit of what Nora has already shared, whereby we get a non-accredited participant to become registered, then we license them, and then we ensure that there is compliance. And for that compliance, we then add benefits to the traders' compliance levels. With that, we also have launched additional parts of the program that is talking to AEO security with additional benefits that also include SARS partnering with other government agencies. And ideally, we then have the global AEO security, which is then talking to trusted traders that receive facilitated benefits globally through mutual recognition. So that's just the model that we use in accreditation. So what is an AEO? An AEO is an authorized economic operator, which is defined as a party involved in international movement of goods in whatever function that has been approved by or on behalf of the National Customs Administration, also complying with the World Customs Organizations or the supply chain security standards. Basically, the program has initially been opened only for importers and exporters. However, with our new legislation coming into force on the 23rd of July, we now are open for business for other operators within the supply chain. And then the criteria. So if you want to take part in the program, what is it that you need to comply with? So we've got two arms to the program that talks to the AEOC program, leg of the program, which is AEO compliance. And under that part, we need the interested party to be compliant with all customs regulations. Then in terms of managing their systems, so we require that the trader that is interested in the program to have systems that are able to communicate with customs. The trader needs to also be financially viable, as well as we also want to see that the trader or someone that is in the company's employ needs to have sufficient customs knowledge. So these are the basic criteria that you would need to meet, and these would usually be audited before you actually get conferred the status of AEOC. Then on the AEOS part of the program, this program basically is looking at predetermined security best practices. So we would be looking at your physical security, your partner security, the people that you do business with, and ensuring that they too are compliant, and you have some sort of service level agreements with them in order to ensure that your transactions and your processes are within the compliance framework. Then we also look at corporate governance, again, ethical behavior within your company as well as the people that you do business with. And for your compliance, as I said, as the program is for trusted traders, so we want to reward you for your compliance. And we get a basket of benefits that is talking to service, that is talking to trade facilitation, risk management, as well as the mutual recognition with trading partners that I mentioned in the beginning. So under your service, you would get benefits like in the first square here that is talking to having a dedicated accounts manager that would coordinate and resolve all your customs related issues. You would get a benefit such as a prioritization when you request for rulings with the National Customs Authority. That's some of the benefits. Under trade facilitation benefits, this is where you would have expedited processing and release of your shipments. And again, with that, you would be liaising with your dedicated customs relationship manager. You also have a choice of location for your clearances of your goods. So you can request customs to have a specialized cargo moved from the cargo sheds, maybe to your own premises, or from the harbor to your own premises and so forth, as well as having prioritization in non-intrusive inspections. Under your risk management, this basically means that the benefits would, you would receive the benefits in terms of reduced intervention. So as an accredited client, because you are now trusted, because you've went through or undergone a vigorous audit process, we now, it allows then customs to focus on those that are possibly non-compliant, but with you, you would then receive that reduced intervention in terms of stops. Then obviously that would lead to a lower rate of physical inspection and exams, as well as reduced guarantees. Then under the mutual recognition, some of the benefits there would talk to international accreditation of the supply chain, meaning that if you are an accredited client in South Africa and you do business with China, for example, you would then also receive the benefits of being recognized as trusted in the receiving country of your goods if you're exporting from South Africa and vice versa. Recognition by other customs administrations as a low-risk trader, which is also talking to something similar, as well as reduced costs and time delays through priority inspections, as well as reciprocal security and compliance benefits. And then lastly, colleagues, this is just our 5-year strategy that is basically meant to grow our program. And we are currently, or rather last year, we were sitting at a 10% uptake in terms of getting clients onto an AEO compliance program. So in this financial year, as the accreditation team, we plan to then increase that to 30% uptake, which then also covers the AEO security. And with having your full AEO status, you get more benefits right up until your AEO global, which is where you get the mutual recognition. And by year 4 or 5, we'll be hopefully on the 50% uptake. And then here on the left, it's just to say that we also plan to expand the program to a single regional AEO, as well as a single government AEO nationally, and that would also assist in augmenting benefits to you, which then also becomes a cost factor in terms of reduced costs, because your goods are moving quicker and faster within the supply chain. So colleagues, that is the end of my presentation, and I'll just quickly allow Henson to then take you through his 1 or 2 slides. Thank you.
Thank you.
Thank you, Stembile. Good morning, colleagues and partners. From my side, I just would like to introduce the SMME traders and travelers, so that you can be in the position to know that SARS as an organization have a segment that is dedicated to SMME within the organization, and also make it available that we will be always on your side to provide all the necessary support as an SMME. Just to highlight that this is a new unit within SARS that came as the new organizational arrangement by our new commissioner. So we are now clustered more on a cluster approach as an organization, unlike how we were structured before. So we are having a service and delivery cluster, and that's where most of the regions and the centralized operation are at. And then we have the enterprise design and enablement cluster. And then we have the support in terms of the enterprise service and support cluster. And then we then also have the office of the commissioner. But what is important for this presentation is the segment. That for the first time, the organization have a full dedication that is given to segment. And one of the segment is the trust, is the government taxes, the estate, and the tax exempt. So today I'm talking from the SMME traders and travelers. So this is the segment that has been introduced in the organization to support all SMMEs that are within customs and excise, as well as SMMEs that are out of customs and excise. So the whole value chain of SMME have a focus, have a full dedicated team that is looking at this. So acknowledging that it's a new unit within SARS, we're still in the process of getting to the full detailed segmentation definition for traders and travelers. At the moment, we're regarding all traders that are not part of LBC, all traders that are out of the high net, they fall under our space. And then these are the traders that were expected to give them the necessary attention. And then in the very near future, we will then be in the position to say who is regarded as small, who is regarded as medium, who's regarded as micro. The next slide is just our key objective to say, how are we approaching, what is our key objective as a segment? Ours is to provide clarity and certainty to taxpayers and traders and make it easier for taxpayers and traders to comply, and also to also detect taxpayers and traders who do not comply or who do not want to meet their tax obligation. And one of our key strategic objectives is to work with or through different stakeholders like we're doing today to get to the taxpayer so that we can improve our tax ecosystem. So the long and short is to say from the approach of SARS now is that all traders, including the small traders that we regard as SMME, they want to meet their tax obligation. They want to meet all the tax and the customs acts that are out there. However, they only need us to give them all the necessary support. And how are we approaching this? We are currently embarked on an insight development where we're busy conducting some research, we're doing some surveys, we're doing some benchmark. The idea is to get to understand exactly what are the challenges and what are the pain and what are the frustration that SMME traders and travelers within import and export, within customs and excise are confronted with. And based on the insight that we're going to get here, we will then develop specific intervention that can respond to that. And we also felt like, let's work through the SMME themselves so that whatever intervention we're coming with must not be something that comes from us, it must be based from the evidence-based. And then from the clarity perspective, when we said we want to provide clarity, we're going to do that by conducting some outreach. And we're also gonna do some awareness, doing some education and training approach, and then do some publication and also get to the policies that are being a barrier to SMME and start the process of reviewing those policies so that the SMME within customs and excise must also start to have the process that is easier. They get the clarity that they need for them to meet their tax obligation. And then from there, we're also looking at the service to say, from the license and registration perspective, what is it that is a bit of an issue for SMME to get to the ladder? And as you know, for one to do import and export, for one to do business with SARS, you need to register. And this is what we're doing with Nora, as she highlighted there, to review the license and register so that it can be easier and quicker for SMME traders and travelers to come in. Also to review the declaration process and the filing to make it easier for SMME to declare so that the traders that are registered with us, it should not just be big traders that are able to declare quicker. So the filing is also part of the service manager is also part of the SMME that they must use. So ours is just to help them and support them to use these digital platforms. And also to ensure that whenever there is payment that is due, the service that need to be provided, as well as our contact center are ready to support SMME from the digital perspective and ensure that there is efficiency whenever our SMME that are not part of the LDC are confronted with any form of challenges. Then once we educate, once we provide all the support that you need to do our platforms, and we're still confronted with SMME that do not want to meet their tax obligation. That's where the enforcement element come in. And it come in as a very last resort after we've done everything possible to ensure that you understand your policies, you meet your tax obligation, you are educated and so on. So if we reach to a point whereby there is a deliberate intent not to meet the tax obligation, that's where the enforcement comes in. And then we said from a stakeholder perspective, we can't do that. We can't get to support all the SMME in the country if we don't work with our stakeholder, both internally and externally. So it's critical for us to partner. It's critical for us to be here so that we can build that relationship and get to the point whereby we work through you, we empower you, so that at any given stage, you can be in the position to meet your obligation. So for today, it's just to give you that highlight. And I'm certain that we will partner again to get to the benefits that comes with this SMME segment. Thank you.
Thank you, Ensign. Thank you so much for the SARS team. Now I'm going to ask Benedicta and Shannon to put up their slides. This will be the last presentation before we launch into the Q&A. And I see that there are already some questions that have been answered and some that we'll then deal with. If just for the audience, for timekeeping, questions that you have, please jot it down in the Q&A box and we'll work through them accordingly. Thank you. Thanks. Over to you, Benny.
Good morning, all. As mentioned, my name is Shannon Newman, and I work alongside Benedicta Durkin, who's heading up the unit called the Ease of Doing Business. The presentation will be in twofold, where I will be introducing our unit, and thereafter I will be handing over to Benedicta Durkin. The Ease of Doing Business core function is to make investment easy and to provide catalytic project support. On our framework, work has been done historically in order to understand what our investors need to set up within our zone. To summarize, the unit of the Ease of Doing Business and its function has led us to this beehive, who consists of the following 6 pillars. On the Freeport model, includes some of the incentives, but Benedicta will be elaborating on this. With regards to Pillar 2, our simplified investor procedures, we have created streamlined, easy to understand investor procedures, which makes it easier for our investors to operate and invest within the zone. For example, just to name a few, we have created booklets under the Department of Home Affairs for visa and work permit procedures and under SARS for tax incentive procedures that you can also find on our SBIDZ website. Under the skilled labor and quality supplier pillar, we've got a dedicated development program unit that looks after skills and training, enterprise development and contractor development to fulfill this role and to deliver requirements that are certified and also verified. Our role in the Ease of Doing Business unit is to provide our investors with stable local content requirements and sustainable skills transfer. As mentioned, with regards to the incentive pillar, Benedicta will touch on that. Number 5, with regards to our land and quayside infrastructure, we are developing land and quayside infrastructure where we have maintained infrastructure and equipment to support the marine and energy sectors. This is required to assist in growing our investors' businesses. The last pillar, which is the service land. Our land is zoned and has a blanket environmental impact assessment, which has been serviced with utilities, the likes of your municipal bulk services, to allow investors to set up their top structures and operations. Our land is also commercially viable and has a tenured structure. This all is done to enable our investors to set up with the ease and to operate efficiently. In essence, to summarize the Ease of Doing Business unit, we offer our investors with a high-end simplified operating model to meet the needs with various partnerships with local and government stakeholders. The Ease of Doing Business unit aims to streamline procedures and processes to make operating at the Saldanha Bay Industrial Development Zone as seamless as possible. Thank you. Handing over to you, Benny.
Thank you, Shannon. I will be very brief. What I do want to give you as a takeaway is how we came to having the SBIDZ as a free port, which was taking advantage of the fact that we are located within the port of Saldanha Bay in terms of designation as a special economic zone. With the map to the right, you see that there's different premises in the dark, which signify the land that has been designated as SEZ, as well as us having our approval as a customs control area over this same designation. This means that we could offer additional benefits to all investors within our zone who wish to become customs control area enterprises, and in thus also reducing some of the additional work and red tape, and we provide support to them with regards to their applications as well. So our zone has a main entry and exit point, which is where you would do the checks with regards to import and export into hinterland, as well as entry and exit points on the quay side when you're getting into the terminal portions of the designated areas. As Ashwin and some of the other panelists have mentioned, the special economic zones and CCA in South Africa are not enclaves. They don't belong to another portion they're not seen as not part of the country. So what we did to be able to fit the, I would say, the global definition of free ports was creatively make use of the existing legislation to build what would be beneficial for our sector that we service, which is the oceans economy of the vessels, marine traffic passing by, the energy, oil and gas sectors. And with the diagram to the right, this is how we've set up our free ports by tapping into the existing fiscal incentives that have been touched on by our panelists. These allow us to be competitive, which I'm sure you would have come across some of the free trade areas or free zones, for example, in Dubai, in Europe, some of the West African countries that offer these kind of financial and fiscal incentives with regards to their free trade areas. And for us, we've made use of what's available in these pockets of incentives to become competitive and add value and become add as an enhancement for attracting investment. And on top of that, to also match with regards to the global definitions, we've created an enabling environment, which is why Shannon is referring to us creating booklets on visas, which is looking at the traffic flow of people, because when you have the movement of goods, you also will have the movement of people in this particular sector, especially with access to a port. We've also developed a ease of doing business center, which offers one-stop shop services, and also have made sure that we comply with international ship safety protocols of the International Maritime Organization when it comes to the level of security that is available in our zone, as well as complying with the security levels that is also required of the customs control area. And just to flash past our ease of doing business center offering with the one-stop shop services, you have access to a myriad of information, different frameworks established. We do streamline processes and procedures and write them up in an easy to understand manner, working with the various partners. And there is one booklet available with regards to the incentives as described in our webinar, which will be shared afterwards. And what I want to draw your attention to is that we also wish to establish a panel of professional service providers. So for those on the call who do offer professional tax and legal services, we will be following up with you with regards to becoming part of that virtual package with regards where investors are sometimes looking for these services and we can easily point them in the right direction. And then also there's the access to services in terms of the ease of doing business center that physically exists, but you also have the option of in-person and virtual assistance for the red tape reduction, innovative solutions, and as well as the assistance into applications, being compliant with the various tax incentives that are available as solutions to investors. I'm going to pause there so that I don't run over into our Q&A session and just say, please do connect with our teams on these various social platforms that we have, as well as following us. And I will hand back over to our program director for the Q&A. Thank you, Kashfa.
Thank you, Benny. Thank you, Shannon. Okay, so for the remainder of the session today, we're on to the Q&A. There's some very interesting questions that have been posted in the chat box, and some have been answered already. I will focus on the ones that have not been answered as yet. So I call upon the panelists to assist me. So the first question from Frans van der Walt, the reality of VAT is the same for all businesses. Why the emphasis on it as a benefit? I think, Ashwin, I think your slides where you show the different types of transactions visually, that can help answer Frans's question.
Yes, thank you very much. Thanks for the question. But the first thing before that is, I just want to mention that it depends what you're looking, what you define as a benefit. Because when it comes to the VAT and the customs and the SEZ policy, the benefit is actually an upfront cash flow benefit. That is all it is. So in other words, what it means is, if let me get this on here. Okay, here we go. So if you look at this slide, maybe I can highlight or try to answer it using this. So you'll see that the domestic supply into a CCAE, I said to you, it carries VAT at 15%. But now with the SEZ policy and trying to incentivize that transaction will now carry VAT at 0%. So what that basically means is that the CCAE is not going to incur the VAT charge. So it's gonna have upfront cash flow benefit. So instead of paying 115 Rand for an acquisition, it's going to pay 100 Rand, right? So that is the benefit we're looking at, and that is the benefit we're trying to define. Remember, this benefit now becomes a permanent benefit if the CCAE exports those goods, right? Because then the 0% acquisition stays intact. However, if the CCAE doesn't export and it brings the goods into South Africa, then I said the 15% becomes chargeable. So that is where I say it's an upfront cash flow benefit, and that is the benefit that we're highlighting. And so the gentleman is quite right. It looks at what you want to define as a benefit. And if you're a vendor, now there's another way of looking at it as well. If you're a vendor in the CCAE, right, a VAT vendor, if you acquire those goods at the 0 rate, it's upfront cash flow benefit. If you don't acquire those goods at the 0 rate, you're going to pay 15%, but you're going to claim it back as input tax in your VAT return. So, but the time that you're going to get that refund from SARS, it's going to be at least 30 days after that. So can you see the upfront cash flow benefit on the date of transaction instead of waiting for a refund from SARS 30 days later if you don't qualify for the 0 rate? So the benefit is an upfront cash flow benefit. Thank you.
Yeah. No, thanks, Ashwin. I think that's quite clear.
I hope. I hope I answered that one.
Yeah, and I think also then, with the example that, on the domestic supply to a CCAE and then domestic supply into the country, essentially means if that is happening, then you only pay the 50% VAT once, because you have the upfront cash benefit in the previous transaction. There's the next question to you, Ashwin. Is the 70% reduction of surety bonds only afforded to operators and not CCAEs? Where in legislation or SARS guidelines is this stipulated? Thanks.
Thanks for that, Program Director. I think I'm going to ask Irvine to help me answer that. He's the customs expert, because the bond issue arises under the customs and excise legislation. So Irvine, if you don't mind, if you can just help us offer an assistance with that answer. Thank you.
Yes, thank you. No, it's not just for the operator. Seeing that we have the licensing and reg guys here, perhaps they can take us quickly through the process.
Okay, but I think in the interest of time, if we can just maybe in the chat or in the answer, just direct the person who asked the question to where in the legislation or guidelines that comes from, that is allowed.
Okay, perhaps what I can do is to direct the client to our SARS webpage. We have a document available to external stakeholders that deals with licensing and registration. So you go to the SARS webpage and you just search for licensing and registration. That is the first document that is applicable. Then we also have an external document that deals with sureties and bonds. which sort of speaks to what reductions in bond is available to which client types. And in this case, of course, if you're within an SEZ, you get 70% reduction in your bond. Thank you.
Okay. Thank you. Thank you. So the answer is no, it's not just the operators, it's also CCAE. Paula asked, yes, the slides will be made available, and we'll send that to you with the recording for participants. Paul asked the question, SEZs are used in a number of locations worldwide. Are the incentives benchmarked against other locations? This could be useful when engaging international investors. Thanks. I think, Andrew, maybe to you for giving that overarching framework of the SEZ program, maybe speaking then about the journey of benchmarking the incentives.
Yes, so certainly from an income tax perspective, there were definitely, I know, although this wasn't done by SARS, it's done by the National Treasury, because they provide for our legislation. We don't actually do it. We're more supportive, so that it works out administratively. But certainly, as with all legislation, they do thorough benchmarking exercises before they create new legislation, and this was no exception. They did that here. What I think we must realize that benchmarking has its limitations. All countries have their own issues and that have to be dealt with. For example, if you look at China, everybody wants to model themselves in China, but probably one of the things that makes them successful, I dare I say this in a webinar, is that they've got next to no labor laws. So they can have people working in these, so they relax their labor laws, and people in the EZs could be working 24/7, 7 days of the week, I'm not, we would never do that. But we take on some of we might bring in certain tax incentives that they might not have in other countries. And in other countries, they might have different tax regimes. So it has its limitations, but yes, a benchmarking exercise is done there. And you can rest assured that a similar thing would have been with the VAT and the customs as well.
Thanks, Andrew. I think also from the SBIDZ side, what Benedicta mentioned is how we came about to this value proposition of ease of doing business, and those six pillars was that we did benchmark against our industries, the markets that we're in, what works for them, from the offshore upstream oil and gas servicing and marine manufacturing and logistics providers perspective. Kumesh asks two questions. Who is responsible for the inspections on all CCAE exports and imports, the physical inspection of the goods and also the documents? Are these CCA SARS officers or the SEZ operator? And then a follow-on question, does these inspections attract a charge? And if so, what are the rates? I think Ashwin or Irvin?
Thank you for the question. Generally, for imports and exports, SARS is responsible for inspections. Of course, the inspections are conducted on a risk-based approach, so not all imports and not all exports are inspected. Where a consignment is selected for inspection, the inspection is done by SARS officers, and there's no charge for an inspection. From an operator perspective, of course, the operator is responsible for the access requirements to the zone, as well as the CCAE. So in that environment, the operator is responsible for checking documents to ensure that consignments entering the CCA, of course, are accompanied by the required documents, being the SAD 500, the VAT 267, whichever is applicable. So in the SEZ CCA environment, the operator is responsible for the check of the documents. If that answers the question.
Yeah, thanks, Irvin. Benedicta, did you want to contribute?
Yes, I just wanted to add that although I was rushing through my presentation, I wanted to signify that we have a set up entry-exit checkpoint at the zone in our access complex, and that is where we would be monitoring what's coming into the zone and exiting from the zone. So we then take that responsibility as well with regards to the SBIDZ as an operator of what's come in and what's come out, and the maintenance of documents and those checks, and then liaise with SARS in that manner. Thanks.
Thank you. Then Wayne asks 2 questions on energy. How do the incentives work for midstream to downstream projects such as fuel storage in the SEZ stored on behalf of foreign clients for trading? And is there specific work being done on incentives for the energy transition, such as LNG and hydrogen projects? Now, this is a big area that's coming into play in the markets, in the industry, with the decarbonization of the shipping industry in particular. The first question, how do the incentives work for midstream to downstream projects such as fuel storage in the SEZ stored on behalf of foreign clients for trading? Benedicta, or would it be Ashwin or Urban again?
The SARS team can go, and I could add.
Okay.
Thanks for that question, Irvine. You can add. I just want to speak on the VAT part, on the VAT aspects of the storage. And you mentioned the foreign company. Thanks for the question. So the first issue that arises is that foreign company carrying on an enterprise in South Africa for VAT, for it to register for VAT? So if the answer is yes, then it will obtain a VAT registration number. So it will be a VAT vendor. The next question is, it depends where these where the storage facilities are, if they're in the CCA or not. And if the storage facility is located in the CCA, then that business would be operating from the CCA, and then it would qualify for for the VAT 0 rating and the VAT exemption upon import on that. Remember, he mentioned storage facilities. So at the beginning of my slides, you would have recalled that when I said that when it comes to storage, you're actually licensing a storage warehouse. And a storage warehouse is regarded as any goods moving into the storage warehouse is regarded as not being entered for home consumption, which means you don't trigger the VAT and you don't trigger the duty at that point in time. So if it's purely there for storage, that's the benefit you would get from the VAT. Irvine, you want to add anything on the customs regarding the storage warehouse? Thanks.
Yeah, there's so many permutations to the question. If as Ashwin said, it's purely just a storage warehouse, from a customs perspective, you'd be importing the goods into a customs storage facility. In fact, you wouldn't even be using 49801. You'd still be using the old purpose code, which is warehouse. And when the goods go into the customs storage warehouse, there is a deferment of duty, in the sense that while the goods are in the customs warehouse, the payment for whether there's duties or VAT is suspended until the goods leave the warehouse. Of course, if it is then exported, that deferment of duty is permanent. If it gets supplied to the local market, then of course the duty suspension is basically stopped, and you have to pay whatever duties and VAT is applicable when the goods go into the local market. If that...
Add one thing, sorry, Archie. I just want to say that generally our process internally with investors, so upon inquiry, we do meet between our business development and when we have a transaction and investor support unit and ease of doing business to ascertain what that business will be doing and how the goods will be flowing in terms of in and out of the zone is for import and export. And then we also are able to give that first line of guidance, if that just also assists those who are curious about that question. Okay, thank you.
Thank you. Then on to Jabulani's question on, I think it would be then to Henson. Is there a timeline to finalize the SMME benefits?
Hi, thank you for the question. Thank you very much for the question. I think I just want to quickly answer it in twofold. The first one is that the registered customs and excise or traders are basically, we regard them as traders, we regard them as taxpayers. So our income tax already have the threshold that indicate that if you are within this particular threshold, within this threshold in terms of the turnover, there are some benefits that are already outlined, that are already available in terms of the other tax types. But you also need to register, you need to comply with all those tax elements. From the customs and excise side, we haven't reached a stage of creating new benefits. We just want to use the same benefit in terms of the different rebates, but we wanted to clarify that process, educate the SMME how to get through those benefits, because we have realized that there's a lack utilization of those benefits. So what is still outstanding is just to give the full definition of SMME from the trader's perspective, which is the customs and excise, which we earmark to finalize it within this year still. Thank you.
Then on to Jermaine's question. Does a service-based company within the CCA also qualify for exemption? And assuming that that company is a CCAE, where this company is responsible for works on port and vessels within the SEZ, within the steel fabrication and maintenance sector in the oil and gas fields. So it's a services based, but it's doing engineering services, if I can put it that way. Ashwin or Urban?
Oh, thanks. Thanks again for that question. You will recall that from my slides, even from the discussions, that when it comes to VAT and customs, we're only talking the movement of goods. And the whole purpose is to incentivize manufacturing. So we're looking at goods. And one of the requirements is if a business wants to locate into the SEZ, it must register as a CCAE. Now, Irvine, you can come in. A CCAE can only qualify for registration if it is manufacturing, if it has something to do with goods. If it's purely service oriented, customs does not even come close to that company. But even from the VAT side, if it's purely service orientated, because the VAT relies on the definition of customs control area enterprise in the Customs Act, and if it won't qualify under the Customs Act, it's not going to qualify under the VAT Act as well. So service orientated businesses located in a SEZ generally would not qualify as a CCAE. Irvine, you want to clarify? Thank you.
Yes, to the extent that, the company is not importing goods or exporting goods, they wouldn't qualify for any customs benefits, because the customs benefits attract to goods being imported, manufactured and exported. And, if you're not importing any goods, then there's really no customs benefit you're going to access.
Good, thank you. Yeah, I think it's in our industry. Yeah, I think, and that's where Benedicta, we have to work with the interested investor and the interested company to understand exactly what their business operation is and their business activities are, because you might think you're a service company, but because you're also potentially doing an element of, importing of goods or exporting of goods, there might be applicable benefits to you. And so I think that guidance and working with you to understand what your business activities are is vitally important in the beginning stages.
Correct.
Okay, there's a follow-up question on the 70% reduction on the one, but I see, okay, somebody has answered it. I think Nora has typed up a detailed answer in the Q&A box. Okay, Richard asks, hi Ash, could you kindly elaborate the issue of indirect exporter? In case where a CCAE imports a raw material under 498.01 and sells the product to the client in the local market, but then can prove that the final product is actually then eventually exported.
Yeah, thanks. Okay, when it comes to VAT and exports, there's two types of exports, as I mentioned very briefly in my slide, a direct and an indirect export. The policy rationale for a direct export is that if the vendor is in charge of the export, he is in control of the export. So in other words, the vendor actually moves the goods from his premises to the port of exit, right? So that is where we say he is in control, or he can even get his carriage contractor to do that for him. So he's in control of that export. So if he's in control, it's a direct export. The other type of export, and this is where the question arises, is that it is an indirect export. I think the best way for me to explain the principle is, let me use a tourist, right? Let's say you have an American tourist coming into South Africa, and he goes and buys a nice diamond ring for his wife, let's say, from one of the jewelers in Sandton. So when that Sandton jeweler sells that ring to that American tourist who is in South Africa, because the tourist is in South Africa, that supplier, that jeweler has to charge 15% VAT to that tourist. Now, when the tourist leaves South Africa, he is actually exporting. So in other words, the vendor who supplied it, the jewelry store, is not exporting. He has lost control as soon as he has handed the ring over to the tourist in his shop. But the tourist is now exporting. So the tourist or the foreigner or another party is responsible for exporting. That is an indirect export. And when the tourist leaves South Africa, let's say he leaves through OR Tambo Airport, we have there what is called the VAT refund administrator. He puts his claim through. Customs will inspect the goods, as Irvine explained, on a risk basis, and we'll refund the 15% VAT to him. So that is on the export principle. So that is an indirect export. An indirect export is where the South African vendor or the supplier loses control of the export because he releases the goods to the customer at his premises, right? Mm-hmm. Now, there's another subcategory to an indirect export where a South African supplier can elect to supply to a foreigner, but deliver it to a designated harbor or an airport. So if he's located, let's say in Sandton, and he moves the goods to, let's say, OR Tambo, and from there, it's going to be exported by the foreign customer, the South African business can elect to zero rate that transaction as well as an indirect export. So you have an indirect export that can be standard rated. You have an indirect export based on whether you move the goods to the harbor or an airport, you can elect to zero rate it, right? So those are the two types of exports we have. Now, coming back to the question, if you look at the transaction where I said a South African business supplies to a CCAE, and I had there in brackets export, that exact same principle will apply to that domestic transaction into a CCAE. I hate to use this, but I think I have to use it in this instance. In this instance, we regard the SEZ as not being in South Africa. What I said earlier, it is in South Africa. So it's virtually deemed not to be in South Africa. So in other words, what I'm saying is, if a South African business outside the CCAE supplies to a CCAE, that South African business must apply the direct export principle or the indirect export principle. In other words, that South African business must physically take the goods into the CCAE, then the zero rate will apply. If he releases those goods at his premises and the CCAE takes it into the CCAE, then the 15% is going to apply with the refund of the tax on his VAT return. So that is basically how it works. And that's why I had export under the domestic supply. But I think that's the best example to use to explain the principle. So it must be delivered in the CCAE by the supplying vendor. Same with services. If you're rendering services, the services must be physically rendered in the CCAE. If it's not physically rendered, you will not qualify for the zero rate. Thank you.
No, thanks, Ash, for taking time to explain that. I think, yeah, it's one needs good tax advice. I
just want to add, Program Director. Sorry, that's why I mentioned IN 40, Interpretation Note 40. It explains the transaction all the transactions very nicely, and these are one of them there. So if I have not been clear in my explanation, please, I implore the attendees to have a look at that interpretation note, and we can clarify further if there's any issues. Thank you.
Yeah. I think we will be downloading the IN40 document and also sharing it with the participants, those that have registered today, in the follow-up message from today's webinar. Okay, so there's a question from Ted. There's a follow-up question from Wayne's question on the fuel storage. Would the SEZ not register as a bonded agent on behalf of the foreign entity, if not an entity in RSA, and issue a surety to SARS for the bonded storage? Benny, I don't know, I think the question is, would the SEZ operator?
It would depend. I mean, I'm jumping. I prefer the SARS specialist to answer first, and I can add. However, from my understanding, also it's that it depends again, as Ashwin was saying, is who is the importer and the exporter. So if the SEZ is not registered as a CCA or CCAE and it has that 498, I think, .01 registration, then I don't think that they're able to have that transaction and the incentive. But I'll definitely default to the team to provide a little bit more technical content, but in a high level, that would be my understanding with this, yes. Okay.
I think in the interest of time, Heather, but when we, please look out for that instruction note, IN40, that we will be sharing with all the participants, because I think there's a distinction that needs to always be kept in mind between the SEZ operator, the CCA operator, which is like ourselves, the SBIDZ licensing company, and CCA enterprise, which is the business that's operating within the CCA in the SEZ. Last question for today, Richard asks VAT 267, is there any other way that SARS can relook the administration of this form, maybe digitize this process? I think perhaps maybe
I'll take that, yes.
On mute.
Yeah, thanks, Program Director, for that one. Yes, I think Richard is quite aware of the burdensome, the burden that the VAT 267 form currently presents to everyone. Yes, to answer the question in short, we have put on a business case within our SARS divisions to actually have the VAT 267 digitized on a similar platform as the SAD 500 is digitized. However, that process is taking some time, but it is being re-looked at. Unfortunately, I cannot provide you with an exact time frame at this point in time, except to say that SARS is aware of the burdensome nature of this form, and we are trying to streamline it and digitize it so that you can facilitate the ease of doing business with SARS. Thank you.
Oh, thank you. And with that, I'd like to wrap up today's session. I just, when we sent out the invitation for this webinar, the objective for us was to explore and explain the investment advantages of the fiscal and financial incentives and benefits of setting up as a CCAE, and the incentives and benefits of the customs control area and the SEZ framework within the IDZ. I think we've achieved that today, looking at the diversity and of questions, the panelists, the representation here today. And I really want to say a heartfelt thanks to all of the participants for posing these technical detailed questions. It gives us clarity and good feedback as to how we need to make the value proposition of the IDZ clearer, and also the working together with SARS and GTAC and the DTIC in bedding down that ease of doing business environment that we always, which is core to our value proposition, and I would want to say our values as the IDZ licensing company. So thank you to all of the SARS panelists and taking the time out to be here today. I've really benefited from today, and I'm sure you have too. Thank you to Benedicta and Shannon and all of the behind the scenes busy bees in making this webinar possible. We will be sending out a follow-up communique to all participants with the information attached in that email. And we ask you to please reach out to Benedicta and Shannon if you have any further tax and customs queries and licensing and registration. Good day, everyone. I hope you have a great week further.